in the screen. Then click on Direct Chat and send your question to IAIS Ask Your Question. And then when you do submit your question, please do include your name and your organisation. So as I say, we have an awful lot to discuss today with many, many rich topics. And with that, I would like to move to our opening keynote. And I'm delighted to warmly welcome our Executive Committee Chair, Toshiyuki Miyoshi, who will give us his introductory remarks. Toshi, the floor is yours.
Hi, good morning, good afternoon, and good evening to everyone. Welcome to the IAIS Global Seminar 2026. I'm delighted to see such a strong turnout. We are going to have a rich discussion today. We will share global supervisory perspectives on the most pressing challenges and opportunities facing the insurance sector, that is addressing the significant impact of artificial intelligence, AI, aiming to close the natural catastrophe protection gap, ensuring that the insurance contributes to societal resilience, and assessing key financial stability risks in an increasingly volatile geopolitical environment. I'd like to take the opportunities to discuss how the IAIS is supporting supervisors as they navigate these uncertain times. Let me begin with the role of insurance in the economy and society. Insurance enables individuals, businesses, and governments to recover from adverse events and rebuild stronger by pooling and managing risks. It provides a safety net that supports financial stability, promotes long-term planning, and fosters confidence in the face of uncertainty. Moreover, insurers are a critical part of the global financial system, investing in assets that support long-term economic growth. In a time of significant change and complexity, the role of insurance as a cornerstone of economic stability and societal resilience has never been more critical. However, for insurance to fulfill these vital roles, it must operate within a well-regulated and supervised framework. For the IAIS, this means international standards that empower supervisors to respond to emerging risks and ensure that insurance markets remain fair, safe, and stable for the benefit of policyholders and support financial stability. With this purpose in mind, we also need to respond to our current environment, described as a polycrisis, characterized by mutually amplifying shocks across markets, sectors, and borders. Our current approach to looking at risks and trends in the insurance sector is very appropriate for this polycrisis world. Since 2020, we have been assessing systemic risk along two dimensions: firm-level vulnerabilities and sector-wide developments, including considering risks that originate outside insurance. This approach helps us navigate today's multi-risk environment. A critical feature of how the IAIS operates is the reinforcing cycle of activities that ensures our work is data-driven, forward-looking, and responsive to emerging risks. This continuous feedback loop between risk monitoring, standard setting, and implementation support and assessment enables us to identify gaps and take targeted actions to address them. Our annual Global Monitoring Exercise, GME, is the cornerstone of our approach to assessing emerging trends and potential systemic risks. Last week, our executive committee members reviewed the latest data received. Thank you very much for those who contributed, and agreed to focus on three key areas this year. They are, first, the impact of macroeconomic risks on the balance sheets of life insurers. Second, transmission channels of geopolitical risk in non-life insurance. And third, but not least, the impact of advancements in artificial intelligence and technology on insurers' cyber resilience. More on these topics will follow later today. The flexibility of the GME framework allows us to adapt our risk monitoring to emerging challenges. For example, our analysis of structural shifts in the life insurance sector has enabled us to build a robust understanding of supervisory issues and potential financial stability concerns arising from these trends, and to provide a credible insurance sector regulatory perspectives on cross-sectoral topics such as private credit. This year, we are focusing on enhancing our systemic risk analysis of these trends, updating our supervisory material where relevant, and developing supporting material to enable an effective supervisory response. Of course, standards must live in practice. That means delivering consistent implementation. Through our assessment framework, including self-assessments, peer reviews, and targeted jurisdictional assessments, we promote consistent adoption of our standards across jurisdictions. Lessons learned will feed back into our standards, keeping them fit for purpose in a fast-changing environment. IAIS agenda for the year ahead aims to address a world of interconnected risks and is dedicated to ensuring that insurance remains resilient and reliable for the benefit of policyholders and society at large. From a period of intensive standard setting, we have pivoted to focus on consistent, effective implementation, advancing the Insurance Capital Standard, ICS, so it becomes a common language for cross-border group-wide supervision. Proactively addressing emerging risks, we will use the GME and GMA Global Insurance Market Report to track key themes such as geoeconomic fragmentation, private credit, and the adoption and governance of AI. In addressing these risks, the IAIS recognizes the importance of collaboration. That is why we are deepening engagement with key organizations and policymakers beyond the insurance community, such as the World Bank, the IMF, G20 and G7, OECD, as well as the FSB, to embed the insurance perspective in policy debates. Since adopting our strategic plan, we have strengthened our engagement with emerging market and developing economy jurisdictions, MDs. We have expanded opportunities for MD participation across the IAIS working groups and forums to ensure that MD voices directly shape the global supervisory agenda. Across this agenda, we will continue to support insurance role in narrowing protection gaps, advancing financial inclusion by ensuring fair treatment of customers through coordinated multi-stakeholder solutions. The IAIS remains deeply committed to advancing our mission. Today's global seminar provides an important forum to share perspectives and to reinforce our collective determination to address the road ahead. I look forward to the discussion and hearing your questions. Let me now hand it back to Jerry to guide us through the session. Thank you.
Thank you, Toshi, very much indeed for your opening comments. And I note in what you were describing there a real focus on outcomes, the outcomes that insurance markets can deliver for society and the outcomes that we as insurance supervisors seek to deliver through our oversight of those markets. And that's something that I've noticed since I've been coming to post here over the last month or so, that a real determined focus in the IAIS on sort of looking at the outcomes, which I think serves us very well. You also mentioned, Toshi, in your comments, you mentioned the challenge of the polycrisis that we are living in. And I mean, it's a relatively new word. I mean, to me, it sort of says that we have now got a new normal of repeated significant disruption and threat. And I wonder, just by way of follow-up, how does something very important to the work of the IAIS, how does geopolitical fragmentation fit into that polycrisis idea? Do you think it's a big part of what you think of when you talk about polycrisis? And is there a risk of regulatory divergence? And how should we be responding to that?
Oh, thank you, Jerry. So geopolitical fragmentation is, of course, one of the serious challenges we face in today's complex global environment. It also means that, of course, there is a risk of regulatory divergence if unaddressed properly. However, within the framework of the IAIS, we can rely on strong tools such as the monitoring framework and standard assessment, implementation assessment frameworks. But more importantly, we can rely on a spirit of cooperation across the jurisdictions and trust amongst the insurance supervisory community. That would foster robust dialogue and help mitigate risk of fragmentation, because it is in the a supervisor's common interest to cooperate with one another in order to respond to the kind of emerging risk which easily cross borders. Let me expand a bit on this. So, for example, over the past decade, we have built a strong global framework for supervisory convergence and collaboration. As I said, this includes the recently adopted ICS, Insurance Capital Standards, as well as the long-established insurance core principles. And the holistic framework is a kind of robust framework for assessing and mitigating systemic risks, and forms a crucial part of the FSB's, system-wide financial stability analysis. Our IAIS members are strongly committed to implementing these standards. As I mentioned, we have a robust framework for, implementation assessments that will enable effective coordination, and even that in times of market stress. In order to help ensure that the convergence is global, we will focus not only on state-of-the-art developments in the advanced economy, but we will focus on supporting our emerging market and development economy members through peer exchange, capacity building, practical resources that would help MD supervisors navigate the uncertainties and growing challenges. So even amid global geopolitical fragmentation, collaboration among the members, I hope it remains strong, because it is a common interest to ensure the implementation of the standards and the common framework for assessing risks. That would allow us to bring different perspectives into a global dialogue. Thank you.
Thanks again, Toshi, for that further reflections. And you mentioned the meeting last week of the IAS Executive Committee, and I think it very much aligns, at least from my perspective, what you said, that there we had 45 very senior insurance supervisors from across the globe who come together four times a year, really with a determination to collectively seek solutions, identify risks, support each other in finding solutions. And that's one of the real richnesses, I think, of what you described, that ability for all of these member jurisdictions to support each other in collectively meeting the risks and challenges, and of course realizing the opportunities that are present in the current context. So thank you, Toshi, for setting the scene for us so well. Maybe now let me open it up a little bit, and we'll move into our panel session, properly so called. And I'm absolutely delighted to welcome our three further panelists. Petra Hielkema, who is the chairperson of the European Insurance and Occupational Pensions Authority, EIOPA. Siham Ramli, who's Director of Communication and International Relations at the Autorité de Contrôle des Assurances et de la Prévoyance Sociale. At Morocco, delighted to have you with us, Siham, and from the National Association of Insurance Commissioners and the Virginia Insurance Commissioner, Scott White. So over the next hour, amongst the four participants, we will seek to explore those key issues that you've put on the table for us. I'd say we'll start with AI and cyber. We'll then have a discussion around that. We'll then talk about Nat Cat, protection gaps, and how we should be thinking and responding to that. We'll very importantly talk about achieving and enhancing societal resilience through the effects of insurance, and then finally financial stability. So can I please again encourage you during each of those sessions, if you have questions, and please do have questions, put them into the chat and we will respond to them. So without further ado, let's jump into that first topic, AI and cyber. Petra, artificial intelligence. It seems to be everywhere. It seems to be disrupting our ways of working. It seems to be changing economic outcomes. It seems to be altering the risk landscape. And it was, not surprisingly, our audience's most requested topic for discussion. So as it scales across underwriting, across pricing and claims, from your perspective, what are our top and what should be our top supervisory priorities to ensure good outcomes? Petra, over to you.
Well, thanks, Jerry, and hi, everyone. Thanks for your interest. Thanks for sending us your comments, and thanks for picking AI. Happy to kick off that block and do ask your questions. Clearly, and we all see that, digital innovation and particularly adoption of AI, it's happening and it is transforming the insurance sector, many other sectors, but let's focus on ours, the insurance sector. And that comes with, I think, a lot of opportunities. Opportunities to enhance underwriting, pricing, claims handling, fraud management, fraud detection, and also customer engagement. So can help reduce costs. It can contribute to financial inclusion, provide better services, quicker services to consumers, and it can help EMDEs, I would say, to leapfrog. And this is definitely a topic where countries can learn from each other, and developed economies can learn from EMDEs. This is something that is changing how we supervise and how insurance does business, which is positive, but it can't be left unchecked. There are risks that we need to understand. There are risks that might be amplifying, and that's why we work on it. Now, as you know, and so I won't dive too much into the details because I assume you are aware, last July we published this application paper on artificial intelligence, and that is addressed to supervisors, and that helps them to apply existing core principles on the supervision of AI. But we didn't stop there. Since last July, we continued, I think, a very good dialogue within the IAIS FinTech Forum, but also within the broader governance, including EXCO, on how do we supervise, what do we see, and building on the experience and the exchange of that, we built a database, a question bank that now can be used internally by supervisors who are on the go, supervising AI, really learning from each other, benefiting from each other's experience. The other thing we will do going forward is that we also need to continue to understand the trends. Trends are going fast. So that is why this topic will be included in the global monitoring exercise, as some questions particularly focusing on underwriting risks, because we now see from the back office use of AI moving to the front office in insurers. And that, of course, is where we as supervisors really wake up to understand what's happening there. But in order to do so, we need some information from you. So that will be collected through the GME. And yeah, the topic that needs to be on our agenda going forward as well, of course, now is agentic AI. We are aware of the need to understand the more autonomous nature of this newer form of AI and how that could pose not just benefits, but also the risks. And therefore, we are also developing a member-only report to, again, share the experience we have today, the observations we do, the way we supervise, and make sure that by sharing that with each other, we help each other to stay up pace with these new developments in supervision. And we hope to finish that in the first half of 27. So, Jerry, that is in a nutshell, I think, showing that it's very much top of mind, but also concretely what we are doing, particularly, I think, in a very practical level, in helping each other to supervise these new technologies while they are being used more and more in relation to customers.
Thanks, Petra. That's really, really clear. And there's an awful lot, as you say, going on, and an awful lot to be responded to. And I think one of the things that people feel challenged by in this space is just, you know, how many different facets there are and different ways of, I mean, as a supervisor, are there, when you think about sort of, okay, how we're going to get our hands around AI and the burgeoning use of AI amongst our supervisory community, I mean, as a supervisor, how do you think about that, Petra? Do you think there's key aspects that we should be focusing on, or from your own perspective, is there a particular angle that you would say, look, this is the way to come at it? What's your reflection in terms of how we practically get at this?
Well, I would say at least three things that you need to put in place. So the first one is really continue to build the knowledge. Forget that you can, you know, hire a few very AI savvy new colleagues and then you're up to speed. No, you need to make sure your entire organization starts to work with this new technology, to understand it, to supervise. So I think that's one. Second, back to basics. Anything in AI is dependent on the quality of data. Now, I would say we are already, as an industry and as supervisors, good in validation of data, in data quality, but this continues to be the fundament, I would say, of how you look at AI, in particular now that we see that there are third-party AI models that use data sets that we may not have developed in-house, or industry needs to understand then how it was developed, what is the data, and also how is it trained. So I think this is also, so get your basics right, understand it, get the basics. And then finally, it's not magic, it's a technology. And so just look at it from that perspective. What is actually the activity the insurer is doing at this time with the use of a new technology, and what rules and what principle-based rules do we already have to supervise that, and how can we then fit that into the AI context? And what you will see is that, first of all, a lot of what now could be considered AI is actually a model insurers have been using for a while. We will recognize that. And then with the new AIs or further developed technologies, there is still a lot of principle-based common sense that we have as supervisors that we can put into practice. And if you don't know how, then again, there is the database, there is the bank with questions, there is the community of supervisors that we can then also check with, like, have you seen this AI? Because often the question is, yes, it is a new technology, it is developing fast, but it's also spreading quite quickly across the globe. So if you see a development in one part of the world, it often pops up quite quickly somewhere else, and this is particularly where we can learn. So know it, have the fundamentals right, don't think it's magic, just apply the logic of the principle-based supervision, and then if you don't know exactly what to do, reach out to the colleagues, because jointly we know a lot.
Thanks, Petra. There's an awful lot in what you said just there, and I really, my ears pricked up when you said, don't treat it like magic, because I think that's at the heart of this. It's interesting because it is such a potentially revolutionary technique. At the same time, it is not doing things, as you say, use of models, use of data that are sort of in themselves new. It's almost the speed and the integration that is. So I think there's something very solid for us to build on in the insurance space. I will come back in a moment, and maybe I'll ask the other panelists, you know, because one of the debates that goes on is, you know, what's one's mindset? Is it one of opportunity with risks to be managed, or is it one of, right, there's really a lot of risks in this space, and that's where our focus should be? But I'll come back and I'll ask maybe Scott and see what they think about that in a moment. But before I do, Petra, just one other aspect that we've talked about, if you like, the inside-out perspective, sort of what this means for insurers and how they do their business. What about the outside-in perspective? What about the operational resilience aspect of this? What about the sort of the threat from these massively speedy threat surface scanning machines that can sort of really get at cyber resilience? What's your perspective on that, and what should we be doing in that space?
Developments, there is also speed, and then here we go, frontier AI models that actually increase significantly the speed with which we need to possibly respond to attacks, and we need to adjust to that. So it is, I would say, not per se a new immediate risk in itself. It's a trend, and a new trend that we need to also include in the way we address, in this case, operational resilience. And it very much, I would say, is a reminder of how important it is to get the fundamentals right when it comes to operational resilience. So what are we doing here? Well, clearly, again, we can refer to an application paper. In this case, the application paper that the IAIS published early February on operational resilience, where there are a lot of objectives and also a toolkit that we published for consultation to provide a high-level framework for meeting the operational resilience requirements that are set out in the core principles of the IAIS. And we had good webinars there, and I want to thank all the stakeholders for providing input here. But definitely what it shows in that document, but also going forward, is that making sure that change management practices, your ability to patch, your backup of data, business continuity, disaster recovery are all elements that are not of something that also should be done. No, it should be top of mind, it should be in place. And if we didn't think that was necessary, I think having these frontier AI models now pop up, that is the reminder, and we need to get on that. And again, we can do that jointly, we can learn together, but here we definitely also need an industry to just act as well as they can, as quickly as they can.
Thanks, Petra. Look, I think that's, again, it's a huge amount in that. I mean, one of the things that people raise time and time again, of course, again in this space, is that issue of also the third-party conduit of these risks. And I think that's an ongoing piece of work as well that the IAS has in hand to think more about that kind of third-party risks and concentration risk, and we'll be doing more work in that space. So I do want to come. I mean, one of the things that stakeholders ask a lot, I find, is, so what's your real mindset, oh regulator? Are you really trying to sort of control and sort of tamp down the effects of AI, or are you seeing it as a real opportunity that you're trying to facilitate? I don't know, Scott, is that a fair question to put to you? Do you have a sort of a view on what should be our overarching mindset towards AI in this space?
Yeah, I thought Petra did a great job of summarizing the work going on at the IAS, and it is kind of the foundation around that is recognizing both the benefits and the risks of this technology in particular, right? I mean, AI and cyber risks are front and center in the U.S., as you could expect, and a couple of points. We do emphasize the benefits, the opportunities that AI can provide. Of course, everybody talks about operational efficiency, reducing costs, providing products and services that are more accurately tailored to individual needs, and the risk assessment, right? And in the U.S., where we're really seeing it show up is in fraud detection, right? These use cases are continuing to build out. But again, as we heard from Petra, significant risks that we need to be aware of. We don't want to stifle innovation, but we want to make sure we are protecting consumers. And there's a lot of reputational risk at issue here, both with the industry and with regulators, if with the cyber risks they're becoming more widespread every day. So you talk about data privacy, consumer protection in terms of algorithmic bias. These all intersect with this kind of technological innovation and kind of amplifies these risks. A couple of things I want to point out. I mean, I am struck by the alignment between the U.S. and the IAIS in terms of how we're dealing with this. If you look at the application paper, it takes a very governance-focused, proportionate response. Again, not to stifle innovation, but where do we focus, how we should be monitoring the industry. Petra talked about the exchange of ideas. Certainly we're doing that at the state level amongst the different states, but that is also going on at the IAIS. We're trying to get our arms around really how are insurance companies using these things, right? We can do a survey, but it might take 2 or 3 years before we collect the results. And of course, we all know how stale it is by that time. So focusing on the GMAR in our own states, we're doing pilots where we're going in and asking the companies, getting that exchange of ideas out to other states, bringing it to the IAS. this is how we can become effective in dealing with what I think is one of the top emerging important risks when you're facing at the IAS and at the states, at the U.S.
Thanks, Scott. Really, really clear and vital sort of pieces of reflection. Sia, maybe just turn to you briefly before we move on to our next theme. But so we've talked about sort of the use of AI in the insurance sector. We've talked about the sort of the threat surface issue and AI as a cyber threat. One thing that also is obviously very important is how supervisors and regulators use technology, and that's something that the IAIS has also been looking at. Just very briefly, Sia, any reflections from your side on sort of the use of so-called subtech, supervisory technology, and the work the IAIS is doing in that space?
Well, thank you very much. I think that Petra and Scott has summarized the real work that the IAS is doing regarding the AI, and I do think that in emerging markets we do have the same challenges. We do face the same challenges, and it's quite complicated today to work without AI. So we are trying to understand what is the impact of AI on the insurance sector. Regarding the subtech, I think that the growing importance of subtech tools is evident as they are increasingly enabled by technological advancement and driven by supervisory needs to use resources more effectively and adopt a risk-based approach. The subtech are there to help the supervisors in their daily work. But following the subtech member survey, in-person workshop and engagement with members and external stakeholders, the subtech member only report was published in February 2026, and it was one of the most important tools that give us more work and to better understand the need of the subtech and the use of the subtech. So to maybe talk about this report, for me as a supervisor from an emerging market, this report serves a valuable resource, and we had some showcase and best practices and offer to us an insight gained from the engagement with all members. And what is very important also to see regarding the subtech and this new technology coming to the work of the supervisors is that we should pay attention to the governance part, because it's very important also to see how we use this subtech in our daily work. So to summarize, actually AI is here to maybe help us to work on the daily work on our mission as a supervisors, but as well said by my colleague Scott, is very important also to pay attention to the protection of the consumers, and we have to look after. This is our first mission, and we have to pay attention on this use in order to better protect the policyholders. Thank you.
Thanks, Siham, and I'm. As you were speaking there, I was reminded of something that Petra said when she was speaking, which is around just the importance of, you can't rely just on a few experts. If you want to change how you supervise and use technology, you have to sort of spread that out within the organization. And one of the real challenges, I think, that supervisory organizations find is how to choose the right project, how to sort of work out, you've got a limited investment budget, you've got all of this technological development, how do we choose the right project? And that's where I think the IAS has such a good role to play by sharing those insights, by having a repository of the different things that have been done and different techniques that have been adopted. We really do learn from each other. And I think, in the current world, there's a massive premium on being able to do that, because choosing, then you can choose how best to spend your money, which is one of the big challenges, I think, as we seek to subtechify, sorry for that word, our various organizations. Okay, let's turn to the second theme that we want to talk about today, which is Nat-Cat protection gaps. Very, very significant area of work for all of us and for the IAIS in particular. And I'm going to turn to Scott first in this regard, in particular because in February, Scott, the NIC as part of its strategic priorities, announced one of those to be increasing resilience through regulation, mitigation, and public partnership. So maybe, Scott, you could just tell us a little bit about what you had in mind with that, and what that means, and what solutions have the most promise for closing protection gaps.
Yeah, certainly. Yeah, that's part of our strategic plan. As you framed it earlier, we're looking at the top risks and challenges, and certainly Nat Cat climate risk stress, both on insurers and our markets. Market stability is a key focus among state regulators. Again, very similar to what the IAIS is focusing on. You know, cat losses in the U.S. contribute significantly to a strain on our property markets. We kind of frame it in terms of affordability and availability issue. And just to kind of give you some numbers to illustrate, you know, the issue in the U.S., between 80 and 90% of insured Nat Cat losses globally occur in the U.S., right? And you're talking about between 110 to 120 billion dollars a year. Most of these are now occurring with wildfires and severe convective storms. The storms are occurring in the Midwest, so it's moving away from you know, the hurricanes and the wildfires on the West Coast. And when you talk about the protection gap, it's kind of hard to pin down numbers, but I've seen estimates from between 35 and 45% of losses that are uninsured. These losses are not distributed evenly. Wildfires, you know, our homeowners markets are pretty mature in addressing, you know, coverage there, as we saw in California with over 30 billion in losses. It's really with the flood and earthquake claims that or damages where you see this protection gap really come to the fore. So we view this as an opportunity at the NAIC. How can we exert leadership in this area? Private-public partnerships are a key thing in order to scale solutions. We talk about regulatory incentives, you know, market-based rates. Mitigation is a key aspect of our strategy, and certainly stress testing to better understand the risk. We really view ourselves and the industry as sitting at the front line of climate adaptation, meaning we can interact and engage with other states, state level, the executive branch level, and certainly with the federal government, with FEMA, but also with that ecosystem that's you know, that involves builders, lenders, real estate brokers, and others who really are important for that you know, that culture of resilience that we talk about. So the main thing we focus on, if I had to give an example, we talk about these mitigation grant funding programs, and what these are in a lot of states, about 20 states and growing. You'll have the state insurance department as a key contributor to set up these programs that provide funding through various sources to homeowners who build their roofs, for example, to higher building code standards that can better withstand wildfires, right? So you're creating more resiliency. This can be applied also to wildfire risk and hail risk, whatever it might be. So it really starts this building out this ecosystem to create more resiliency. Of course, the end result there is it lowers the risks, thereby lowering claims, which should result in lower premiums. The other thing I would mention is we've really focused on flood insurance this year. As I mentioned, that's where there's the biggest gap in folks having insurance. We're working on a national blueprint. What I would emphasize is the importance, at least in the U.S., of consumer education. They need to know whether there's a risk with flood or earthquake to purchase it. So this is critical for consumer reps, for example, to help spread the word. So how does this all relate to the IAIS? There's a lot of global alignment. It's like similar to AI. We're kind of looking at it the same way. It involves a broad engagement with various stakeholders, practical and scalable solutions. Where do we find those? And a focus on evidence-based solutions. We've really tried to lean into elevating the role of the IAS as a global policy agenda. We've been working with the World Bank on a G20 input paper, basically saying there's an urgent need to address insurance protection gaps. All supervisors have really a basis for action, and they can offer solutions in this space. The other thing I talked about earlier with AI, just a critical role of the IAIS and the support it provides for an exchange of ideas. There's just a big hub of resources available for us all to learn what other jurisdictions are doing. There's robust peer exchange, there are case studies. So we viewed it as very valuable. And the last thing I would mention is of course, the GMAR special topic last year, which was the financial stability implications of Nat Cat protection gaps as part of the global monitoring exercise. It basically talks about spillovers that can occur to other parts of the financial system, to the real economy. What I mentioned earlier, banks, real estate, households, government finances, and the need to be focused on that. Developing a framework to address that, recognizing it's going to be specific to each jurisdiction, but really just saying there's more work to be done and we need to be working together. So I do view this like AI certainly is one area in which the U.S. is aligned with the work going on at the IAIS.
Thanks, Scott. So really some really interesting numbers and figures in what you were saying there, as well as the sort of the powerful content. And you mentioned that sort of the mitigation of of public works programs that then can feed through into obviously to insurance premiums. I think what that also points to is the need for as much join up as can be achieved, and supervisors can play a role in that, in working with authorities and the industry. For example, if where works are done, to make sure that that is well reflected and that people understand the impact of that, not just by waiting necessarily for all of the data to flow through. But Siam, I know you wanted to. I know you have some really thoughtful insights on the issue of public-private programs. Do you want to say a little bit about your reflections on that aspect?
Yes, sure. So as Scott says, well, public-private insurance program can be effective when built on a few key principles. And I think first, it's important to recognize that every country's situation is different, and not all solution will work on circumstances. For this reason, any approach to addressing protection gap must start by embedding incentive for risk reduction and adaptation. This is the essential foundation from my point of view. And when well-designed, PPP are particularly powerful because they bring together the complementary strength of the public and private sector. A critical design consideration is to embed risk reduction investment directly into the program, either through direct investment or by fostering collaboration across sector, so that insurance actively promotes and encourage improved risk management standards. So I would like here maybe to share with you the Moroccan natural catastrophe scheme. It's a good illustration of this approach. We took 10 years to work on it with the World Bank, and as it is built on the public-private partnership mechanism that combines state support with the private sector expertise and efforts. So Morocco is committed to sharing this experience and fostering peer exchange with other jurisdictions, especially from emerging markets. So a significant challenge remain the time required to develop and implement these programs. As I said, it took us 10 years. It took a lot of reflection and also a lot of exchange of point of views. So I wanted just to share these schemes and the importance of the public and private programs that could really help to find a great solution for the markets.
Thank you, Siham. That's a very helpful perspective on that. We have a question coming through from Shazia, and the question to Scott was, when you were talking about NatCat and the NAIC's work in that space, you mentioned regulatory incentives, and the question is whether you could expand a little bit on what do you mean by regulatory incentives in this context?
Yeah, it's a good question. One thing we focus on, why we're so focused on mitigation programs, resilience, is really what are the levers that policymakers and state regulators have to address affordability and availability. So in the space of how that risk is priced, the majority of states in the U.S. use basically a concept called risk-based pricing or competitive pricing, which is based on the idea that we don't approve rates, we don't set them at a certain level to lower them, to make them more affordable. We hope there will be more competition. And really that's important from a policy standpoint because it signals where the risk is. we have so many folks in the U.S. that are moving into areas where there's really high exposure. Think of all the wildfire all the wildfire areas in the West Coast where people live now. And if you suppress those rates, then it makes it more difficult to address it from a policy standpoint. So that's one thing we focus on. Certainly, states have different approaches, but we do think transparency in that area is important to signal where the risk is and address it. On our flood insurance program, which has been heavily subsidized, that's an example of where it's not necessarily working the way it should. So you have people moving into those areas. They have multiple claims in certain cases, and then the program is very heavily in debt, right? So we look at that as an example of maybe this is not an approach that leads to effective solutions. And so that's basically an example I would provide when it comes to regulatory solutions.
Thanks, Scott, and thanks very much to Shazia for the question. It is, as I say, it is a really good opportunity to add to the conversation. So thank you for that question, and please do, colleagues, keep the questions coming. It's very good to have them. Maybe I just have one very short question for each of Petra and Toshi now, which is really in this space of protection gaps, just to ask if there was one, because there's many angles to it, there's many ways of thinking about it, and Scott's talked a lot about that, and Siham. If there was one angle that you'd say, okay, this is the bit that sort of I would bring to the fore, I would like to mention this bit in relation to how we go about being successful in closing protection gaps. I don't know, Petra, is there one that you would call out, or are they all important and you have no favorite?
I would say that the one thing we need to address today is the coordination challenge, because it will only work if we all act. And that means that individuals need to mitigate and adapt. So do cities. Insurers can provide that knowledge, can provide the insurance, can provide the products. Possibly you need public-private partnerships, but in what way? But there's still this tendency to first say, but the others should, and then wait. And this, we need to get to action. So my focus is to get to action. I think the action, the way to get to action is to take out this issue of who moves first. And the role supervisors can play here is for sure to continue to identify what can be done today, and also providing the data on why it needs to be done and what is the impact. And I mean, an example we have is the dashboard that we publish as EIOPA, where per member state on our website, there we show what is the exposure to multiple perils, what is the insurance, what is the cap, and when are we going to work on this. But I would say dealing with that, the challenge of the coordination to really have everyone move instead of everyone pointing to someone else to move first. That we need to overcome, because once it moves, I think we can do a lot more than we're doing today together.
Oh, that's really, really clear and strong. Thank you, Petra. I don't know, Toshi, a lot's been said. Anything from your perspective, any particular aspect that you would call out that you think about that bit?
Yeah, exactly. A lot has been said, so I have a few to add, but perhaps the priority would be different across jurisdictions. Maybe, improving literacy would be a priority for many MDs, emerging markets and developing economies. For example, there may be a room for public-private role of the public sector in terms of risk sharing. But at the end of the day, what is most important would be the collaboration between the public and the private sectors. As Petra just mentioned, it's a kind of coordination problem as well. But in terms of, for example, data collections, in order to deal with NatCat protection gaps, we do need granular data, even at the municipal or local government level. So we do need more granular information and data from, including from public sources. On enhancing literacy, perhaps there will be a role for public sector in terms of, providing public education, but also there may be a role for, individual insurers from their own business interest, and also in incentivizing risk reduction. That would also require right incentive provision both by the public and the private sector. So in most of, if not all, of dimensions, collaboration between public sector and the private sector will be very important. Within the governments, for example, there may be a role for fiscal authorities and wider government in terms of land zoning, construction, permission and something like this. So in most of the areas, such collaboration would be essential going forward.
Thanks, Toshi, very much indeed. And look, I think we'll move on now from protection gaps. But I think what we've seen in that discussion is both why it has been such an important topic on all of our agendas over the last number of years and continues to be, but also why the regulatory and supervisory community has such an important role to play, because this is such a multifaceted challenge to deal with. And I really like, Petra, how you sort of sum that up as being, it's fundamentally a collective action problem, a collaboration problem, and by getting people in the room talking across borders and talking across disciplines and talking across particular type of participants, that's how we can really sort of make progress in this. So thank you all for those views, and thanks again for the questions that came in. So let's now turn to our third theme, which is that of societal resilience. And one of the notable features of the strategy that is the current IAIS strategy is that one of the three strategic themes is supporting the societal outcome of resilience, working with regulators, with supervisors to support the insurance market in delivering for societies. So that means placing a lot of emphasis on the outcomes that are achieved by all of the members of the IAIS across the globe in all their different jurisdictions and the different challenges they face. And a very, very important and very significant component of that is, of course, the emerging market and developing economy jurisdictions, where we have a lot of activity and a lot of focus in terms of how do we, as an organisation, collectively support each other in delivering those outcomes. So maybe turning to you, Siham, if I could, first of all, maybe just a very simple question. What do you see as being the unique challenges faced by supervisors in emerging market and developing economy jurisdictions, and maybe how through the IAIS do you feel that those can be addressed?
Well, thank you very much, Jerry, for your question. But before maybe I respond directly, let me briefly set the scene with a few figures on AMDs. Within the IAIS, the importance of AMDs is very clear when you look at the numbers. So nearly half of the IAIS member jurisdictions are EMDs, which allows the organization to truly reflect a global perspective and to deliver on its missions of promoting effective and consistent insurance supervision around the world. So AMDs are also well represented in every region. In some regions, the IAIS membership is entirely composed of EMD jurisdiction, underlining how central they are to the IAIS global framework. So with that context in mind, let me now turn to your question. Societal resilience lies at the heart of the IAIS missions to promote effective and globally consistent insurance supervision. The IAIS strategic plan highlights the pivotal role insurance supervisors play in supporting insurance to serve its societal purpose to foster resilience and sustainable development. So the challenge and the opportunity here is particularly relevant for EMDEs. So when we consider the current global landscape, EMD face a unique combination of structural challenges that make building insurance resilience particularly complex, such as low income, lower level of financial literacy, and high exposure to climate and natural catastrophe risks. We have also a large informal sector, but also constrained institutional capacities. So these factors can affect both the affordability and accessibility of insurance, while also limiting insurers' ability to develop sustainable business models. So in addition, gaps in data, digital infrastructure, supervisory resources, and risk-facing mechanism can inhibit innovation and market development. So for the IAS, and the IAS supports supervisors in addressing these challenges by highlighting the role of insurance supervision in narrowing protection gaps and strengthening societal resilience. Through our work on inclusive insurance, consumer protection, and protection gaps, the IAS has developed practical guidance that helps supervisors consider issues such as accessibility, affordability, and responsible market development, while providing platform for peer exchange. And as Petra said, when we collaborate all together, when we have exchange, we can find solution all together in order to maybe learn from each other. So recognizing that many of these challenges cannot be addressed by supervisors alone, the IAS works closely with the international partners to promote coordinated approach and share good practices, including other standard setting bodies and other organizations with related financial inclusion objectives, such as United Nations Special Advocates for Financial Health and also CGAP. At the same time, the IAS continues to strengthen supervisory capacity building, and for me, this is one of the most important roles that the IAS is playing now, on delivering training and opportunities for regional engagement and strengthen institutional capacity and equip supervisors to respond to emerging risks and evolving needs to their markets. So if may share here some work that we did. So over the years, we have continually strengthened our capacity building efforts. For instance, in the last decade, over 2,000 supervisors have been trained through the FSI, IAS regulatory and supervisory training online courses. Our regional engagements have expanded significantly, now covering almost every region and reaching between 500 and 700 supervisors annually, with nearly 80% of participants coming from EMD, and this is very important to highlight. And to support members on implementing risk-based solvency regimes, we recently collaborated with the IMF to deliver on IFRS 17. This initiative reached over 200 supervisors across 19 jurisdictions in the Asia-Pacific region, and another 180 supervisors from 25 jurisdictions in Sub-Saharan Africa, Middle East, and North Africa. So just to maybe let you know that the IAS is trying to put in place a lot of peer exchange, also capacity building, and this is for us very important. Back to you, Jerry.
Thanks, Ihan, very much. No, yes, indeed, it is. I mean, it is one of the enormous, as we've seen throughout all of the themes we've been discussing, that ability to exchange views, exchange insights, support capacity building, share experiences, that operates in all aspects of what we do. And then I think as a particularly powerful aspect, and it's something that we are very additionally focused on in terms of the EMDE community, where you can sort of see real additional bang for one's buck, as it were. So apologies for such a facile phrase. One thing that's also worth mentioning, I think, when we talk about sort of outcomes in the outcomes that insurance can deliver in different markets, of course, a really important part of that is that populations, people, have confidence that insurance will deliver for them, and that the way the market will operate so that their interests the interests of the policyholder are to the fore. And that bit of work, sort of that idea around value for policyholders, outcomes for consumers, that's also a very important part of the work that we have been doing over the years and that we continue to do. So, for example, at the moment, we have a consultation out on fair value for insurance customers. It is going to close on the 28th of July. So let me take this opportunity to encourage people to respond to that consultation. I think it is something that is really at the heart of successful insurance markets, is that idea that consumers feel confidently that they will be getting a good value, and that really is something that supports very much this outcomes focus that we have. Another thing that is very relevant in this respect is financial inclusion, and again, this is something that you've personally been very involved in, and that the IAIS has done a lot of work on. Maybe just if you say a little bit about how you see financial inclusion, where we are on that journey, and what more might be done.
So, as you said, the financial inclusion is still a challenge for a lot of emerging markets, and the IAS conducts its work on financial inclusion mainly through the Financial Inclusion Forum and cooperates closely with the Access to Insurance Initiative by CGAP and other organizations. So, IAS Working Group and Forum, given it's a cross-cutting nature. In particular, the fifth, as you may know, drives forward 4 key activities. First, exchange on supervisory issue and best practices, and knowledge generation with a focus on emerging risk and trend impacting inclusive insurance and financial health, and advocacy for inclusive insurance within the IAS, and advocacy for the need and the relevance of inclusive insurance at the policy maker level. So the IAS is also currently revising its application paper on financial inclusion to reflect the development since its original publication in 2012, and to emphasize the critical role that the inclusive insurance in promoting financial health and societal resilience. And given that financial inclusion with the various thematic area of the IAS work, we have also the application paper, which is currently undergoing internal consultation, and our aim is to launch a public consultation in Q3 with the publication targeted to deliver on Q2 on 2027. All that to say that financial inclusion is very important. And also here I would like to say some few words regarding the financial education and the financial literacy, because for emerging markets, it's very important also to have programs on financial inclusion in order to also encourage more financial inclusion. So for me, in terms of advocacy, the IAS and E2II, as part of the network on financial inclusion between the Bank of International Settlement, the global standard setting bodies, and financial inclusion organizations such as CGAP or others, we are trying to work all together in order to address this. And I think that our engagement as an association is very clear regarding the financial inclusion.
Thanks, Sian, very much indeed. And indeed, I mean, it is interesting how often across our various discussions, when we're talking about different outcomes, whether it be protection gaps, whether it be capacity building, that issue of sort of financial inclusion and financial literacy relatedly comes very much to the fore. So thank you for that, and thank you for your leadership in that space as well. I mean, maybe just before we move on to our final theme today, maybe Petra, if I could just ask you, just on this topic of capacity building and our work in the space of sort of delivering on outcomes in different types of market. Do you have a perspective on that in terms of, you come from a membership organization of a type covering the European Union's membership. Do you have a perspective on sort of how the IAIS should be thinking about capacity building and how it approaches that question?
Well, I would say that it's very important to realize that, particularly in the last couple of years, there was a lot of focus on the ICS. Let's mention that one as well today, which is for IAIGs. But there is a huge amount of insurers serving, I think, the public beyond those. That have the attention of the IAS and that make use of new technology and that need to help to fill the protection gaps and to build societal resilience. And with that, you have a lot of supervisors who have the same goal. So the focus of the IAS is naturally a lot on the sharing. And again, as I said, if certain topics are different in experience. So I think the way to address this is to really, and I'm referring to the work that I'm doing with the FinTech Forum, is to really ask questions and then see who in the group has been dealing with these phenomena already. So if we recently discussed decentralized finance, if you then see which jurisdictions speak up and say we have this and this is how we deal with it, that might be different ones than the ones who would speak up first when you discuss an ICS. So I think it's very much raising the topic, bringing it to the table, and then allowing a discussion, identifying whether or not we need to provide application guidance or an internal supervisory toolkit to address that. Now, what then the IAIS needs to do is to be as inclusive as possible to actually make that dialogue happen and make sure that the right people are in the room, that people, to the extent possible, also have access from a language perspective. New technology can help here. And we just want to mention, I think CM is doing a great job on the French-speaking part, making documents accessible. And so this is part of the dialogue within the IAS. How do we make documents accessible? How do we have easy like moments online where we can actually explain to a wider community, this is what we're doing, this is what we have already on the shelf, you can use this when you supervise, and also inviting people, and most of the time these are meetings over lunch so that the whole world can join, with deep respect for some of the colleagues in either Australia or in the west of the US who are then working at weird hours, but they are there, very dedicated to facilitate that discussion. And we need to really consciously continue with that, because the benefit really is for all. And just bringing that back to EU, EU is often seen as a market with huge players, but we have many member states where really currently most of the insurance is just MTPL because it's mandatory, and the same challenges for climate and aging, etc. are there. So we can learn from each other, and also you can learn, but can also bring lessons to the table.
Thank you, Petra. And indeed, funnily enough, I had in my mind the exact same example that you just gave there. But it was quite a striking example where we were having that discussion around distributed finance and the role that it may have in insurance markets going forward. And indeed, as you say, because it was such a rich discussion, because the examples and the experiences were coming from a very wide diversity of members, and that was a real powerful discussion. So thanks for that, Petra. So let us turn then to our fourth topic. Last, but absolutely definitely not least because of its size and complexity. And that, of course, is financial stability. And I'll turn back to, if I may, to Toshi on this one. And Toshi, as we all know, the IAIS has been closely monitoring structural shifts in the life insurance sector, particularly the rise of private credit as a potential source of systemic risk. Maybe you could tell us a little bit more about the IAIS work on this space and potential key areas of focus going forward. Toshi, over to you.
Thank you, Jerry. Indeed, our key focus area, one of our key focus areas has been the structural shifts in the life insurance sector, particularly the increase in the investments by insurers in alternative assets such as private credit and growth of AIR, asset-intensive reinsurance. So we have been monitoring these trends since as early as 2021. And last year, the IAIS had two key outputs. One was in our 2025 GME. We did a sector-wide thematic focus on private credit. And the second is an issues paper in which we provided a detailed analysis of the drivers and potential risks of these structural shifts, and with insights into how insurance supervisors are addressing these challenges. So our main finding is that while the aggregate exposure of the life insurance sectors to alternative assets remains modest, we nevertheless see rapid growth in some jurisdictions and some among certain insurers. Notable trend is that private equity firms acquires insurers and reallocates their assets into private credit funds originated by those firms. Additionally, AIR is being used to shift assets and liabilities to offshore jurisdictions, maybe taking advantage of differences in tax regimes and capital requirements. So of course, these structural shifts can enhance diversification and improve return profiles. But at the same time, these shifts can create risks related to liquidity management, valuation uncertainties, leverage, and interconnectedness. So that is why we, IAIS, is closely monitoring these structural shifts, including through data-driven risk assessments and focusing on investment in liquid assets and cross-border reinsurance practices. So looking ahead, IAIS has several initiatives planned to address these risks this year. First, we will enhance our data collection and conduct deeper systemic risk analysis of structural shifts, including private credit. Second, we are developing application papers on alternative assets and ARR practices to provide practical guidance to supervisors. And third, we will review our ICPs, insurance core principles, to address any remaining gaps identified in our analysis and work. Back to Jay.
Thanks, Toshi, very much. Very clear and, as I say, a very important piece of work for us. And it sort of brings me on to the question that we received in there from George Brady, who asked, basically, could we explain a little bit how the IAIS is engaging with other standard setters on non-bank finance, especially, for example, the FSB and the G7, G20, to highlight the positive role, in George's words, that insurers and reinsurers play as non-bank, but also as highly regulated and closely supervised financial institutions. So maybe, Toshi, you are at the heart of our, for example, engagement with the FSB. But you say a little bit about sort of how we engage with the FSB and other standard setters?
Thank you, Jerry. Perhaps I'm in a better position than others in terms of answering this question, because I am also a member of the FSB plenary in the capacity of course, chair of the IAIS executive committees, as well as a representative of Japan's Financial Services Agency, the regulator. So in the context of the FSB, their focus is on the risks and stemming from growth of NBFI, a non-bank financial intermediation sector in the global financial system, including from liquidity management and leverage and hidden kind of data risks and kind of systemic implications. So it is in that context that FSB has been paying keen attention to the development in the insurance sector in terms of their investment in alternative assets such as private credit and particularly under AIR. And they are particularly interested in identifying close interconnectedness between the private credit markets and private equity markets, and that insurance sector and the banking sector, in order to identify possible risks to be addressed in terms of ensuring financial stability as a whole. So many of the participants of the FSBs are from central banks, who may have different perspectives and different time frames in terms of risk management and others. And so from that perspective, we at the IAIS aims to provide insurance regulatory perspective in the point, because as Mr. Brady said, that insurance is a heavily regulated sector. We do have sufficient robust data collections, and we have in place very resilient and robust regulatory and supervisory framework. And of course, we do need to improve our data collection and supervisory tools and cross-border cooperation. That's exactly what the IAIS is doing in the context of cross-border cooperation among insurance supervisors. So what we have been doing at the FSB is to making contribution to the analysis, so financial stability analysis at the FSB from insurance regulatory perspective. Indeed, in some of the working group, IAIS secretariats take the lead in analyzing the interconnectedness between the private markets and the insurance sector in order to provide part of the sort of overall picture of interconnectedness between the NBFI, including insurance. Back to you, Jerry.
Thank you, Toshi. And I think that question and your answer are enormously important ones. I think the role that the IAIS has over the last number of years played in developing and then implementing the holistic framework and the global monitoring exercise has been not only enormously imaginative and enormously effective, but also in terms of that work across the different sectors at the global level to understand financial risks and their interconnectedness. It has been hugely powerful and important. So we must not forget how significant the work that all of us do, and when I say all of us, I mean regulators, supervisors, industry, in being able to give life and effect to that global monitoring exercise is really a rich resource. And sort of that relates. We have another question, which maybe Scott, I might ask you to answer. This comes in from Xavier Solano, who is the co-chair of the JAFIA Life Insurance Structural Shifts Working Group, and Xavier asks, could we provide an update on the planned next steps in this area, that's the structural shifts work, and whether the IAS intends to engage with industry stakeholders, including the JAFIA working group, as the work progresses? And Scott, do you have a perspective on that?
Yeah, I thought Toshi did a great job of talking about this issues paper, the structural shifts, that is kind of a key underpinning of our work in this area. And I'll point out the results of that, showing that on an aggregate level, there's a relatively low exposure, but we are seeing a growing trend in this area with the use of alternative assets, offshore reinsurance, and there is some concentration with individual insurers. So there's a recognition when this paper was completed that wouldn't be the end, that we would need to continue our analysis and make sure we're staying on top of this issue. And Toshi mentioned what the goal is really in this area is to really review and update supervisory material and also supporting materials, kind of giving tools to jurisdictions to kind of monitor and regulate this risk. He mentioned specifically enhanced data collection and deeper systemic risk analysis. And I think that's what the question is getting to. I know this is the question that's being put front and center in front of the Monitoring and Risk Assessment Committee. And I think the idea is, yes, there's additional data we need to collect, potentially, to better understand the markets overall. That may include information needed from individual insurers. I think we're also always cognizant of the burdens on the industry and making sure the data we ask for is necessary, and are there other ways we can collect it. So I think as an initial step, I would guess one potential approach is that we would go to the supervisors who are already monitoring these risks and see whether they already have that information. And after that exercise is done, is there a need to collect information from individual insurers? So I think that's probably how they're looking at it at this juncture. And so I would say stay tuned, but that's kind of our philosophy in terms of better understanding this particular area of supervisory regulation.
Thanks. So yeah, look, I think that's very well put. That obviously, you know, the success which we've been talking about in terms of the IAIS and the insurance contribution to that really important overall work of ensuring financial stability on an ongoing basis, critically important, reliant on data. But as you described, very also equally important that we don't that we have regarded all the time to the burden, that we're not asking more than we need to ask for. So therefore, if we have data already, we should get that first from the supervisors who have it, and then go on from there. So thank you, Scott, for that answer. Petra, I'm not sure. Did you want to come in there, or were you signalling coming in? No, coming in. We'll go on a bit, and then we'll come back. So we're running into our last now little part of our discussion, and that is where we turn to the open questions session. So if you have a question you would like to ask the panelists on any aspect, then please do take the opportunity to ask that question. So I see we have got one coming in. On a topic that we haven't focused specifically on now, and this is a question from Omole Isiaka Adua from the National Insurance Commission of Nigeria. And Omole asks about implementation assessment generally. Does the IAS assess the performance of individual insurance supervisors in their jurisdiction? And if yes, what is the feedback? If no, what is the reason? And I think, Petra, were you happy to, is that one that you were going to come in on?
I think there was another one about capacity I was volunteering for. I mean, I can say something. I think in general, what we do, of course, is we do peer reviews, we do self-assessments, we assess the implementation of ICPs, etc., etc. So we also really encourage jurisdictions that are a member to sign the MMOU, which again is a moment where we also look in how jurisdictions are doing on supervision. Maybe the way the question was drafted sounds a bit like, here is the IAS coming to check if you do a proper job. But that is not what we do. I would say we have agreed on a set of core principles on how we think good supervision should look. It's principle-based, so it can fit in the national specificities of an individual jurisdiction. And then we try to assess how far you are on your way of actually doing it that way, identifying where maybe things can be better, trying to find the documents, but also the colleagues that have that experience to try to build, I think, a global community of insurance supervisors to a certain level of supervision. And I'm sure that CM could add to this as well a bit.
CM, did you want to come in on that question?
Yes, sure. So I think that Petra said the majority of the response, because the participation to the assessment is voluntary. Is voluntary. I don't think that we oblige countries to participate, but from my perspective as an emerging market, it was something very helpful. I mean, we had some feedback on PRP, and those are when it is from a country to the IAS is something that we can have on on a constructive feedback, but it is clearly anonymous, and it's from the secretaries or from the assessors to the country. And also when we had the member assessment program, it's a very important program, and this program it's confidential and constructive, and it gives us the possibility to better understand where we are and what is the difference and the gap that we have with the ICPs, and to have maybe a clear roadmap in order to put in place what we have to work on. So I think that the objective is to help supervisors to deliver better outcomes for policyholders and contribute to the financial stability, while for sure respecting the diversity of supervisory system across our global membership.
Thanks, Ian. Thanks, Petra. And yes, look, again, just to add my own little thought on that, which is, you know, as I've sort of been immersing myself renewedly in the work of the IAIS, is sort of it clears to me that there's two aspects to our sort of implementation assessment peer review. One is very much, as you've been describing, that bit around support for jurisdictions as they are enhancing and developing their own regulatory and supervisory frameworks, to be able to give them feedback and sort of have that feedback loop around progress and how best to progress. And then, of course, there's the other bit, and we see it a lot at the moment in terms of the insurance capital standard implementation, where we are focused also on consistency and effectiveness of implementation. And that in itself, led by our implementation assessment committee, is a very significant piece of work focused on that consistency of implementation approach. So then we have another question coming in, and this one is from Hugh Francis. And Hugh asks, are there any specific gaps? Sorry, I missed a question there. Sorry, beg your pardon. There was a question first from Ian Adamczyk on protection gaps. Apologies to Hugh, hopefully I'll get back to you in a moment. Regarding the various protection gaps society faces on both the P&C and the life front, do you think there's enough capital and capacity in the insured sector to adequately address them? And if not, what are your thoughts and solutions? And I think that was the one, Petra, that you were sort of keen to come in. So eventually, successfully, I bring you in.
Yeah, great. Thank you. Good question. Good question. Important question. And I would say, I think currently there is a lot of capital in the insurance industry, but let's say I think that we are not at the point that we say there is not enough capital in society. And I am basing now a bit on also the effort we're having in the European Union to enhance savings for retirement, to prepare for old age. And I would say that we have not reached the end of things we need to do to get to a better space. And I think that holds for a lot of aging countries. It has to do with awareness and with that, so data that is available, overviews that is available, dashboards that are available of citizens of where they are today. It has to do with an assumption that government will provide, which has a difficult political message, but maybe governments need to signal that they will provide a bit, but maybe you need to do something yourself as well. And I think once that sinks in, there is a lot of I think capital still in society that might be channeled to products that save for better retirement. And I think you see across the globe many jurisdictions that have an aging society working on programs, bringing it back to the IAIS. What can we do? On the one hand, you could say it's very difficult because in the end, you're dealing with a lot of differences per jurisdiction. It has to do with social law, with labor law, with existing pension systems. But at the same time, what you can do is bring together the information of what are the questions in these contexts, what is the research done, what are solutions found, and with that provide a kind of a menu that once you have the awareness in society, you do not only share that you need to think about this and maybe you might have a problem, but you also share, inform about solutions. And I think with that, there is still a big role for industry to play. So currently, my answer, if it was a yes or no, I would say no. But the longer answer is, again, that we need multiple activity to happen to get to a better place, particularly in aging countries. But maybe in the countries that don't immediately have that problem, it is already good to think about that now and avoid getting to the place where we are today when in aging societies.
Thanks, Petra. Now, having mentioned Hugh, I think I should do him the fairness of at least giving the opportunity to answer his question very briefly, even though we're just at time. So, Toshi, if I may turn to you very briefly, Hugh's question is, are there any specific gaps that have been identified that it is deemed the ICPs do not already adequately cover? And if so, when might that be shared? So, Toshi, is that one I can hand to you?
Okay, thank you very much, Jerry. So I try to be brief. So in this regarding this question, we actually did a sort of gap analysis, particularly related to AI risks and the climate-related risks. And actually, the IAIS concluded that ICPs cover a wide range of risks. So we do not see the need for any kind of changes to our standards themselves. But at the same time, so in order to attend the kind of specific characteristics of the risks concerned, we have developed application papers which aims to provide more practical support for our supervisors. So I hope that this answers the question.
That's short and sharp. Thank you, Toshi, very, very much indeed. So to all who've participated today, thank you very much. We've now reached the end of our allotted time, though it feels like we could go on much longer. I've seen more and more questions coming in. To those of you who've asked questions there at the end, apologies that we are out of time and can't get to them. So first of all, let me thank you all very much for your participation. We have really enjoyed preparing for and then having this engagement with you. And thank you for all the questions that came in. We look forward to continuing this engagement as we go forward. Let me thank very much Toshi and Siam and Scott and Petra for their time, but most importantly for the deep insights that they have shared with us today. It is very much appreciated. And then finally, if I could make one last appeal, there is a QR code which you will see on your screens. All of those who are participating, it will lead you to our feedback survey. We very much value receiving your reflections and very brief feedback on the event. So if you had the time, we'd very much welcome your comments. With that, friends, colleagues, thank you very much for joining us. We hope you've enjoyed the discussion today, and we shall see you all again shortly. Thank you very much. Bye.